Hi, everybody. Bill Gaylord here. Welcome to the Friday Market Update. The best loan officer on the planet. Of course, I'm joking, but that's fun. This week, we're seeing some pressure on interest rates again. And the main driver right now is oil. It just continues to go up. So oil prices have risen sharply due to the tensions in the Middle East and concerns certainly about the Strait of Hormuz. So if you're not familiar with it, the Strait of Hormuz is one of the most important shipping lanes in the world. I'm sure you've been hearing about it on the news. Roughly a fifth of the world's oil supply moves through that narrow passage. When there is disruption or even threat to disruption, that flow of oil, markets react super quickly. So energy prices are moving higher. They're up to like $94 a barrel, which is very high because they were in the 60s before. And that creates much concern about future inflation. When investors start worrying about inflation, interest rates rise and mortgage rates get pulled along higher with them. So we're already starting to see that show up in mortgage rates. Yesterday, the Mortgage News Daily Index had the average 30-year mortgage rate climbing to around 6.35%. They haven't released today's rates yet, and as I record this, but based on what I'm seeing in the markets this morning, I would not be surprised if it comes in right around 6.4%. So we're definitely higher. We dipped down into the high fives, 5.98% a little bit ago. So we've definitely jumped up in rates. So the pressure on rates right now is largely tied to what's happening in the energy markets and the uncertainty around how this situation is going to play out. How long will it be? But there is another side to this story. So if the United States and its allies are able to stabilize the situation and reestablish the flow of oil through the Strait of Hormuz, markets could rebound very quickly. Financial markets hate uncertainty more than anything else. But once that uncertainty is removed, they tend to snap back faster than people expect. So the big question right now is simply timing. How long will it take to stabilize that region and secure the passage of oil again? Nobody knows that answer, obviously, today. It's going to be very difficult to predict, but it could happen quickly or it could take a little bit longer than expected. Until the market has more certainty and more clarity, we will likely continue to see some volatility in the interest rates. Now, I want to put it in perspective too, in that interest rates are still about 0.5% lower than they were last year. So while it seems like, oh my gosh, rates are climbing, they're still not as bad. So a bigger picture, the perspective that we have is that they're not as bad as they were last year. Now let's talk about how this affects the housing market. Whenever uncertainty rises, you tend to see the same pattern. Buyers hit the pause button. They wait, they watch the headlines, they want to see what happens, they're concerned. You see it with uncertainty around inflation. So you see it with uncertainty around jobs. And you definitely see it when there are geopolitical events like the one we're watching right now. So when people feel uncertain, they often default to taking no action. They just stop. They don't do anything because they're kind of like a deer in a headlight. They hit the pause button, and the buyer activity can actually create opportunity for those buyers who actually see what's going on long term. So when fewer buyers are actively competing for homes, sellers often have to become more flexible on the price. That can open the door for buyers who are willing to move forward while others are sitting on the sidelines waiting to see what happens. Now, this is an important concept that I talk about with buyers all the time. When you buy a home, there are really two major variables: the price of the home and the interest rate. Most buyers focus almost entirely on the interest rate because it impacts their mortgage payment. They wait for the rates to drop before they make the move because it's affordability. But the reality is that the interest rate is more flexible of the two. Interest rates go up and down. It's like the stock market. Now, home prices, they can also go up and down, but interest rates can change. And when they move lower, homeowners have the ability to refinance and reduce their payment. That option is always there in the future. What you cannot change later is the price you paid for the home. Once you buy a home, that purchase price is locked in. So when markets become uncertain and other buyers just kind of step back, that can sometimes create a window of opportunity to secure a better price on the property itself. And over the long run, that purchase price tends to matter far more than the interest rate you started with. So if we do see some hesitation from buyers in the coming weeks because of the uncertainty around oil prices and inflation, that may create opportunities for buyers who are willing to move forward and stay focused on the long term. Right now, the market is really trying to answer two questions. First, how long will this disruption in the Middle East continue? And second, how quickly can the flow of oil through the Strait of Hormuz return to normal? Now, once the market starts to see clarity around these issues, we could see a fairly quick rebound in financial markets and potentially some improvement in interest rates as well. Until then, we may be in a bit of an uncertainty zone. And when we're in an uncertainty zone, the best strategy is usually to focus on the fundamentals. So if your buyer finds the right home at the right price and it fits their long-term plan, the price of that home is the thing you want to secure. The interest rate can always be improved later when the interest rates move lower. So as always, I'm Bill Gaylord, the best loan officer on the planet. Be the buffalo, charge into this storm, make it happen for your buyers. Thanks for watching. We'll see you next week with another update. Talk to you soon. Gaylord out. Bye.